Emerging markets are often called the frontiers of growth. But what does that really mean for investors, businesses, and everyday people? Are they full of opportunities, or just risky bets waiting to go wrong? In this video, we'll break down emerging markets in simple, clear terms, explaining what makes them different from developed economies, where the potential for growth lies, and the risks you need to watch out for. Today, we will talk about emerging markets explained, opportunities and risks. So before we start, make sure to hit the like button and subscribe to my channel. 1. What are emerging markets? Emerging markets are countries experiencing rapid economic growth and industrialization, but are not yet fully developed. They often have expanding middle classes, improving infrastructure, and increasing investment opportunities. Examples include India, Brazil, China, and South Africa. These economies can offer high returns for investors and businesses due to fast-growing markets and rising consumer demand. However, emerging markets also carry higher risks compared to developed nations, including political instability, currency fluctuations, and regulatory challenges. Understanding emerging markets helps individuals and businesses identify opportunities while managing potential risks. While these countries may be less predictable, they are often central to global economic growth. For investors and global companies, emerging markets can be both exciting and challenging, requiring careful analysis and strategy. Recognizing what defines an emerging market is the first step to understanding how these economies interact with global trade, investment, and development. 2. Why emerging markets matter. Emerging markets are increasingly important in the global economy. They contribute to global growth through manufacturing, exports, and consumer spending. Many multinational corporations rely on these markets for sales, production, and labor. Emerging markets also attract foreign direct investment, which supports infrastructure, innovation, and employment. For investors, these economies can provide diversification and potential high returns, though with increased volatility. Their growth often influences commodity prices, global trade patterns, and economic policies in developed countries. Understanding the importance of emerging markets helps explain why shifts in these economies can impact global markets, currency values, and international business strategies. Awareness of their role allows businesses and investors to plan effectively and capitalize on global growth trends. 3. Opportunities in emerging markets. Emerging markets offer unique opportunities for investors, businesses, and entrepreneurs. Rapid economic growth, a young and expanding population, and increasing consumer demand create a fertile environment for new products and services. Industries like technology, healthcare, infrastructure, and consumer goods often see significant growth potential. Investors can benefit from higher returns compared to developed markets due to undervalued assets and expanding industries. Businesses entering these markets early may establish strong brand recognition and market share before competition intensifies. Understanding these opportunities helps individuals and companies evaluate potential rewards while preparing for volatility. Emerging markets often provide a combination of growth potential and demographic advantage that developed economies may lack, making them attractive for strategic investment and expansion. 4. Risks in emerging markets. Despite their potential, emerging markets carry significant risks. Political instability, corruption, and weak regulatory systems can affect business operations and investment returns. Currency fluctuations and inflation may erode profits or savings. Economic dependence on commodities or single industries can make these economies vulnerable to global price changes. Additionally, limited access to credit, underdeveloped infrastructure, and social inequality can create challenges for businesses and investors. Understanding these risks helps individuals and companies make informed decisions, balance portfolios, and develop strategies to mitigate potential losses. Awareness of both opportunities and risks is crucial for anyone looking to participate in emerging markets, ensuring preparation for the uncertainties inherent in fast-growing economies. 5. Investing in emerging markets. Investing in emerging markets can be highly rewarding but requires careful analysis. Stocks, bonds, real estate, and mutual funds offer different levels of exposure and risk. Diversification is critical because volatility is higher than in developed economies. Investors must consider political stability, economic growth trends, currency risks, and regulatory environments. Emerging market funds allow access to a range of companies while spreading risk. Understanding local market conditions and economic policies helps investors anticipate potential challenges and rewards. While returns can be higher, so can losses, making knowledge and strategy essential. Successful investing in emerging markets involves balancing risk and reward while staying informed about global and local developments. 6. Role of demographics. Demographics are a key factor in emerging market growth. Young populations, increasing urbanization, and rising middle classes create new opportunities for businesses and investors. Younger workers can support industrial growth and innovation, while a growing consumer base drives demand for products and services. Demographics also influence labor costs, productivity, and long-term economic potential. Understanding population trends helps investors, companies, and policymakers anticipate demand patterns, labor market shifts, and consumption behavior. Demographic advantages in emerging markets can accelerate economic growth and make these regions critical for global business and investment strategies. 7. Global trade and emerging markets. Emerging markets play a crucial role in global trade. Many are major exporters of commodities, manufactured goods, and technology components. Trade partnerships with developed nations support economic growth, while imports provide access to advanced technology and services. Trade wars, tariffs, and supply chain disruptions can disproportionately affect emerging markets, creating both risks and opportunities. Understanding their role in international trade helps businesses and investors predict market trends, supply chain challenges, and export opportunities. Emerging markets' integration into global trade makes them key players in shaping the future of the world economy. 8. Infrastructure and development. Infrastructure development is both an opportunity and challenge in emerging markets. Roads, ports, airports, power, and telecommunications are often underdeveloped, limiting productivity and growth. However, investments in infrastructure create significant business opportunities, employment, and long-term economic benefits. Governments and private investors often collaborate to improve infrastructure, attracting further foreign investment. Understanding infrastructure needs and development priorities helps companies and investors target high-impact areas, enhance efficiency, and gain competitive advantage in these markets. Strong infrastructure is a critical factor in unlocking the full potential of emerging economies. 9. Technological growth. Technology is transforming emerging markets by improving productivity, connectivity, and access to services. Mobile banking, e-commerce, and digital platforms allow businesses to reach more consumers efficiently. Tech-driven innovation can create new industries, enhance education, and reduce poverty. However, technological adoption may vary across regions, creating disparities. Understanding the role of technology in emerging markets helps investors and businesses identify opportunities for growth, innovation, and long-term development. Technology is often the bridge that allows these markets to catch up to developed economies and compete globally. If you liked this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.